Welcome back. Standard Mahurat pattern. Unfortunately, the market is going to end in the red, but of course, the first half was good, and it's only about token trade. Mr. Hussain,
it doesn't dull our spirit, right?
It doesn't dull our spirit one bit. And there are bigger things than stock market, of course, Sonia, in life. So, but yes, for now we're reporting about the market, which is a bit flat. But again, mid-cap index is up, and that's where you got to focus on. And Mr. Hussain has been recommending a lot of stocks. Mr. Hussain, you recommended Donier on our channel. I think it was your last Mahurat pick. It's been a three-bagger for you, but you are picking that stock once again for this Mahurat as well.
See, Anuj, actually you can say that I'm revising my target. So obviously this qualifies as a buy also. If you recall last year in the Mahurat, I recommended the stock at 24. Today it is 72. As I said, it has given you a return of 200%. But on the absolute number, it has given you 48 rupees return. So on 72, I'm expecting the stock still to give you a return of 36 rupees. That means about 50%. For the simple reason, because if you see their textile division, the new plant which they've set up in Surat, are making fine shirtings. Those who have seen the advertisement of Raymond, they are only focusing on the white shirting of a high value category, which is produced by this company, number one. Number two has been the real kicker of the real estate division or the realty division, which I stated in my last year's recommendation that they are owning Donier House at Andheri of about 10-story building, 1 lakh square feet, half of which has been leased out. And if you see, the company has started yielding about 8 to 9 crore annual rental income. Half of the space is occupied by them, half is leased out. So that's the second point. Third point, that interest liability is continuously seen on reduction. The things are quite positive for the high value shirting makers or high value textile makers. So all these pointers are going in favor of the company. 75% promoter stake, and as I said, the assets are quite rich. If you see the market cap of sub 400 crore, all goes in favor of. So again, at a current price of 73, 74, qualifies a good buy. I won't be surprised to see a gain of about 50% till next Diwali.
Okay, so that's on Donier Industries, but I understand that you have one more stock.
Yes, that's right, Sonia. And in fact, the last stock is Sarda Energy. Okay. And if you see Sarda Energy, the things are that I'm quite positive on the steel companies, and more especially those who are into the mid-size and making the integrated or maybe the raw material for the various companies or where the various components. But this is Prakash Industries, is an integrated steel player. They are making 3.5 lakh ton of sponge iron, 2.5 lakh ton of long products like billets, blooms and bars and all that. But apart from that, they have ferroalloys division with them of 1,50,000 ton. They have 75,000 ton in their subsidiary, 75,000 ton in their own company, with backup captive power project also of 80 megawatts each in both the companies. That means 1,50,000 ton of sponge of ferroalloys with power manufacturing capacity of 160 megawatts, which take care of their entire power requirement. And just to give you an example, the company is giving these standalone numbers. They don't report the consolidated number. For the first quarter, the company has, this ferroalloys division of the company has posted an EBIT of 26 crore. That means if I just double it, as I said, 75,000 ton capacity also exists in the subsidiary. They have made an EBIT of about 50 crore from ferroalloys division alone, against last year whole of FY16 has shown a negative EBIT of about 4 crore for the company. So that means the ferroalloys divisions are showing excellent realization, and that is the reason NMDC and MOIL, the two stocks, if you see in this last 1 month, has risen by about 25%. This Prakash Industries has posted an EPS of 25 rupees in first quarter standalone. But that was having an exceptional item because of the some arbitration claim having won by them in their favor. But on a standalone operation, it is 7 rupees 50 paise. Taking all this into consideration and the consolidated numbers, I won't be surprised to see an EPS of at least 40 rupees from the company for FY17, and share now ruling at 260 again qualifies to give you a gain of about 50% by next summer. So this is my fourth recommendation.
All right, Mr. Tulsian, thanks a lot for taking time out, and once again, very happy Diwali to you and your family.
Thank you, Mr. Tulsian. Okay, we'll take a short break, but when we come back, we will be just in time for the market closing, and we will also get you some more important market opinions. Stay with us.